Good morning, this is the Phoenix Blue update for Monday the 12th of June, brought to you this morning by Tom Colley. Well, after a big week last week with the UK election, we have another big week ahead of us. We obviously still have the ramifications from that election, but we also have statements and rate announcements from 4 central banks. We have the SNB, the Swiss National Bank, the Bank of England, the Bank of Japan, and then for the States, the FOMC. The FOMC meeting is going to be, without a doubt, the most significant one this week. The markets appear still to be very certain that there will be a rate hike at this month's meeting. So we would expect to see another 0.25% rise. What will be the point of real interest will be the dot plot, which is how the individual members see rates rising over the next 3 years, and of most interest will be if there's any variation from the previous dot plot in respect of how rates will continue to rise for the remainder of 2017. The markets had been expecting a third hike as a minimum additional to the 2 we would have already had once we get through this June one, assuming we do. That is an area that there's a lot more doubt over. So we see potentially that the hike this week would be priced into the markets, but then we could, despite that going through, we could have the potential of a sell-off on the dollar based on a less aggressive pattern going forward. In terms of news on Friday, we had manufacturing production for the UK disappointing quite substantially. We had a forecast of 0.8 and an actual of 0.2. The previous month we'd had a contraction, which, if I remember rightly, wasn't expected either. So negative information on the pound, although obviously the election dominates there, so very difficult to see if that had any effect on the markets, if it had any at all, bearing in mind the bigger picture. And we also had some good employment and unemployment data out of the Canadian economy Friday afternoon. That saw a bullish move on the Canadian dollar, which really just offset what it had lost 2 days previously, as the price of oil dropped substantially on the back of the US inventories coming in ahead of forecasts. If we go to the charts here, we've got the dollar index. Key level for us is this 96.40, which so far has held. We've had a push above that. You can see I've got a downward trend line. We've got 3 tips through there and an anchor up there. Looking to see, just to get a picture of what's actually happening. I think we need this 97.80 broken for there to be any significant bullishness on the dollar here. But clearly that FOMC meeting this week is the big issue. So we will be cautious with that in mind, and all the other news and events in mind. Over on the euro, we have the opposite trend line there. We have a COT extreme here to the short side. Mine's sitting right up here because although I've got levels marked through here, they aren't significant enough for me to take as a COT extreme. We have seen this extreme level for quite a while, and it's already been ignored on at least one other occasion. So I will be looking for a break of this trend line and a move to the downside. My preferred option would be a break and retest of 1.1115 there. Intraday, I will be interested in the 1.1285 highs there as a double top trade, but only on an intraday basis. And on an end of day basis, we'll be looking for a move to the downside to see a sell-off on the euro. However, as I've already said with the COT extreme signal, I also see potential for for the euro to continue strengthening through to that 1.1450 level, which is a significant weekly level going back historically, and that would be a level that I would be looking to trade to the short side based on the COT extreme there. Over on the yen, well, we're within this falling wedge I've got marked here. Again, a lot will depend on the interest rate move and dot plot from the Fed this week. But in all honesty, I'm not really interested in this market on an end of day basis until we get a break above that 110.80 or below the 1915 or even the 1808.15 there, which is the most recent significant low there. Intraday, we are in what we could call the summer period, so range trades and ranging markets are much more common at this time of year, so that would be something that I'd be looking at on an intraday basis, but particularly cautious. Although the Bank of Japan rate announcement isn't until Friday, obviously what we've got ahead of that, we've got a very quiet day today. Then we've got the Fed on Tuesday. So really the whole week will be pretty cautious from my perspective. Over on the pound, well, we saw the big sell-off based on the election result. Interesting to note that this was where price was when the election was announced. This is the day of the announcement when Theresa May made that shock announcement. The market shot up. And as you can see at this moment in time, it still hasn't lost or taken out the low of that day of that announcement. So to a certain extent, this market is still, in terms of the election, on the bullish side. I'm not saying I'm looking for bullish moves in this, but we are somewhat, well, we're certainly in an area of uncertainty. We have the Conservative Party with the biggest number of seats without an overall majority. They're all at the moment talking to the DUP, which is an Ulster Unionist Party, about what's called a confidence and supply agreement. This isn't a coalition, it just means that there will be an agreement for the DUP to vote with the government on any vote of no confidence that the other opposition parties tried to put in place, and also the supply side is effectively agreeing to the budget, but obviously that budget will be affected by what the DUP see as their priorities. So in all fact, as a matter of fact, in the net result, assuming this comes into play, will be that the Conservative government will only be certain in those two areas, being the budget and any vote of no confidence. They would still have to deal with everything else on a vote-by-vote basis, which means that any actions that they're looking to take will be much more reserved and of a smaller nature than can be expected. They'd have the Queen's speech this week, and they need to have those policies in place to suggest what they will do in the next parliamentary session. But all that hangs on this agreement with the DUP. Should that agreement not happen, and there has already been some poor information, the Conservative Party or Theresa May suggested that there was they were dealing with the details of an agreement, having in principle agreed. The DUP at the weekend didn't actually confirm that as being correct. They suggested they were just still in general negotiations. So clearly, if that was to fail and that agreement wasn't to go in place, we would clearly expect downside in this market, simply because that would create a much higher degree of uncertainty. It would mean that the Conservatives would be governing with a true minority, and in all honesty would really mean that it was only a matter of time before a new election had to be called, with Brexit negotiations on the horizon only next week to start. So considerable uncertainty. So in summary, a market to stay away from at the moment. Once the and if the DUP statements agreement comes into place, that would be the first time I'd be looking at what this market was likely to do, which probably means not doing anything with it this week. Over on the Kiwi, well, we've had quite a bullish move recently on the Kiwi. We've got two legs here in A, B, C, D move. We're looking for a pullback. I like this level through here, a big number at 0.7500. Clearly a level that's been tested significantly before, and also would provide a platform for a move of a third leg up there to the next level. So that's 0.75 round figure, something that we're looking at as an end of day trade. Also interested in Kiwi. These were the two markets which were moving most significantly last week, showing strength against the US dollar, both now looking for pullbacks. Certainly nothing end of day within reach today on the Kiwi. We will look ahead at that later in the week. Over on gold, sell-off last week, the second half of last week, we had a COT extreme signal. It was a full 100% short extreme alert that came out of this week's data. Clearly it's too late to physically trade that, but the fact that prices moved from that significant level, and that's a full 100% move, means that that move through there, quite potentially Tuesday's aggressive move into that level there, triggered the alert. So we're now looking for downside in this market. I'm interested in a BPR, a breakout pullback retest at the 1264, 1265 level there, looking to target in the first instance this rising trend line here. Alternatively would be a retest double top of the 1294, 1295 level that we've seen the reaction from at this moment in time. Quick reminder, we have free trading event on Wednesday afternoon in London. Really late now for this. If you are interested, email us at info@phoenixblue or go through the contact page at phoenixblue.co.uk. Okay guys, so just as a summary, a lot going on in terms of central bank news. We've still got a great deal of uncertainty in the UK. We are otherwise in a period of time when the markets are slightly less active. So focus from our perspective will be on intraday trades this week, and taking a measure on what those central bank statements are, particularly the Fed on Wednesday. Okay, have a great day's trading, and we'll speak to you again in the morning. Take care.